Hello traders and welcome to live trading session video. It's still Napan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So today's topic that we're going to be doing as we're going live into the markets today is on the opposite stretch. As you know, we have explored on the previous videos on what stretch is. Today it's going to be what the opposite stretch means. Okay, so let me show you on how we can explore into this and get some real meaningful trades. So firstly, we have to take a look at the stretch concept. Remember the stretch concept, as I was talking about in our advanced workshop in Traders Toolbox as well over the weekend, is that the stretch is the nearest extreme to the open. In fact, Lawrence, one of our live trading room presenters, he's called it nearest extreme to the open, which is Neo, right? Remember Neo in Matrix? And then our other Vedanta Elite member, Keith, he used to call the other part of it. If this is the smaller range from the open, or the nearest extreme to the open is Neo, as he called it, or it's called also a stretch, which was popularized by Toby Crable. The other side can only be known as the bigger range from open, as Keith called it, bro. All right. So there you go. You got Neo and bro, isn't it? Nice abbreviations over there. So right. So that was the stretch, isn't it? So once the stretch is formed, then as intraday traders or as swing traders, if you want to extend the trade on, you're looking to capture the BRO for the day or extend it later on with the next consecutive bars. Now, as mainly intraday traders, you're interested in capturing the BRO. Once the stretch is formed, then the BRO only is left to form. And once that adds up to your range, then you're out of the market. That's one way of trading. Now, the other thing is, how do we decipher when the stretch has been formed? Okay, so let's take a look at this. So what do I mean by the opposite stretch? You see, one way that we showed you the last time is that if you look at today on this, let me just adjust the time frames a little bit. So this one here, let me just edit that. Okay, that seems correct. Okay, that's 0, 0 starting. Okay, that should be fine. That should be fine. Okay, good. So you can see over here that if you look at how will we see whether the stretch has already been formed to the low of the open. In this case is very, very small. In fact, it's almost about just 1 pip or less than 1 pip. In fact, almost no stretch even. But it's just taken out this green line. Remember, it's equidistant. So once it takes out this green line, all it's saying is that it's confirming that the other side has become the stretch for today, and this is highly probably becoming the bro, right? The BRO, the bigger range from open for today. So that's what this is telling you. However, on the other hand, there's a very good trading opportunity that you can get, and it's quite fast and quite aggressive as well when you get this. And this is what we're calling about the opposite stretch. So far we looked at stretch, what it is, right? And why it's important. I've mentioned that to you before, because that's how a bar forms. It's part of bar formation. It's very, very scientific and logical. And how do you trade it? We have looked at it before in our previous video, so do look at them. Today we are looking at opposite stretch. Opposite stretch means, look at this, right? So it went to the downside. That means you are thinking that this opposite side is where the stretch has been formed for today, and this is going to be the BRO. In opposite stretch trading, what we do is that we wait for the first stretch line to be breached. Then we wait for the next stretch line to be taken out. And at that point, when it closes above, we take a position. Okay. Either you can enter on the close, or you can be a bit aggressive and you can enter on the green line here. Each will have its own individual statistics. I will encourage you all to go and find out that according to the different instruments that you trade on. And after you put the position on, two things then remain. How are you going to trade manage? And where are you going to exit? Because that's where the money is made, is it not, traders? After that, in actually opposite stretch, the move should be much more cleaner and smoother. So trade management should be behind the low of every bar. It should be much more aggressive because it will move at a further velocity to cover up for the time that is lost. Okay, so that's what it will do. So trade management just on every low of every bar. Next thing is exit. Where will you exit? Again, for the range of the day, or you can even extend the range, because usually in opposite stretch moves, the range actually extends, and you can actually go even for 1.5 ATR of the bar. I would encourage you all to get your OE tables on opposite stretch moves. Okay, so how do we combine all of this together? Finally, what I would say is enter in direction. You must always have direction and timing, right? So in direction wise, get the direction from the daily. So for example, here at the moment, it's a top to bottom. Okay, top to bottom. So I'll only be taking in a down direction only. So today I wouldn't have taken this particular trade. Okay, because it was, if it was a down, then how would the setup look like? If I want to take an opposite stretch, that means it has to take out the green line to the upside, then it's got to come down all the way to the red line, and then we will take a position to the opposite side in line with the daily direction. But it's the opposite stretch, right? It's taken out this and then come back down. That's what we would be doing in opposite stretch trades. Okay, so for example here, this one is a good example on the 7th of April. Let's take a look on the 7th of April here. So this hasn't confirmed its top to bottom yet, because this was where the confirmation bar came. But if you did want to take it as a turning point, then you can see that over here, it did take out the opposite stretch. The first one that it took out, it did reverse. Of course, you trail it to here, your loss would have been a little bit lesser. Over here, then you can then aggressively trade, which you would have captured a little bit of profit on. Okay, so you must know your OE tables to capture the trade, and also your stop loss must be a bit more aggressive, as well as your time exit as well. So how long you're going to allow the trade to go before you cut it, even in live. Sometimes you can even look at a time exit of just 1 hour if it doesn't move in true velocity. This is the kind of move that we are looking for in an opposite stretch move. Okay, takes out the upside, comes back down, and that's the velocity move that we are looking for. If it doesn't do that, and within your required timing, you can cut it out live and take out a small loss and keep waiting for this kind of trades where it's opposite stretch moves. Okay, so I'll leave you guys to it to reflect on. If I want to take a look at Aussie dollar today, let's see, let me just get rid of this trend line here. So this is a top to bottom move, right? So top to bottom move over here today. Did we have anything here today to the opposite stretch? No, it must have taken out this first low and I come back down, but it's done the opposite today. It's taken out that, so I wouldn't be looking at that. Euro dollar on the other hand, again, probably not. We didn't have particularly a trade to the low and to the upside, so that's fine. Dollar yen on the other hand, top to bottom over here. So we are looking for the stretch to be taken out to the upside and then come back down. So we didn't have any of that. So that is something that you can look at. So to trade on, which is called the opposite stretch. I'll leave you guys with that for today. So quite a bit for you all to take in and to reflect on, and then to get your data sample and then to trade on that if there is a true edge in that statistical validity. Okay, we go through a lot of that in our Traders Toolbox. In fact, I think a very good place for you to start on is our free video series. Either you can start off with the live trading room video series, or you can also start off with the TLM video series as well, Trade Like a Master video series. Okay, all those links will be found on our website or below this video as well. All right, so that's all from me for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.